We're going to be talking Netflix earnings, Tesla earnings. I want to start first with Netflix earnings. We got Netflix shares down a little bit after hours here. Allie, what is the main takeaway that you're seeing right now driving shares down?
Yeah, main takeaway is they guided Q3 revenue lower than expected. They said Q3 revenue would come in at $8.52 billion. That's below expectations of $8.67 billion. And it comes after revenue also missed estimates in the quarter. But you're seeing earnings per share, a significant beat there. I also want to call out a few other notable beats here in terms of profitability. We had operating margin and free cash flow steadily beat those expectations. Operating margin hitting 22.3% in the quarter. That's well ahead of Netflix's own projection of 19%. Also, free cash flow, the expectation there was $542 million. It came in at $1.34 billion, and Netflix also raised its full-year outlook for free cash flow to $5 billion on the heels of that double writer strike, which we have been hearing from analysts. So interesting that the strike is not hurting Netflix. In fact, it's boosting Netflix
also
a little bit.
Interesting in the overall context of the streaming conversation we keep having, and we keep talking about profitability, right? And how these companies need to be profitable, and now the only streaming company that is profitable just showed a lot of metrics about being more profitable and increasing in that sign, and now they're getting hit because the top line isn't doing well. At some point, what is it? To some extent, it seems like a little bit.
And look, I mean, the expectations were so high heading into this report. There was a ton of bullish sentiment. We kept getting analyst upgrades. We kept getting price target boosts. I was a little surprised to see that we didn't have a double beat just because of how many notes I read that said they would significantly beat on all of these metrics. And now that we got one that missed expectations, investors are punishing the company, so to speak.
Yeah, maybe a case of too high expectations going into this report. I was surprised to see that strong subscriber growth numbers. I guess we've seen the password stuff kind of feeling that bite there on a positive trend for Netflix. Also funny, interesting to note that that writer strike stuff. Is it because they're not going to be paying out some of these fees that they're increasing that limit there? Is that part of the reason why?
Yeah, that's part of it. Just not having to spend so much on content because there's no content to be created to buy with the actors on strike, and the writers also on strike. You mentioned subscribers, 5.89 million net additions. The expectation there was for roughly 2 million. So huge jump there. And if you remember about a year ago, we lost 1 million subscribers. So for Netflix, this I think is really good momentum heading into the back half of this year. I'm very curious to see what executives are going to say on the call, right? Especially in regards to the strike, because I do think we get a lot of context and a lot more color on the call to these numbers. And I think that could potentially change the share price.
Yeah, and just Josh, talking about profitability, it's a pretty profitable business. I mean, over 20% operating margins, that's great. You would be very happy to have that. But maybe there's this whole sell the news a bit here after a nice run up. I think that's part of it.
That's what I was going to say. I mean, I think that's going to be a story of this earnings season. When you think about a lot of what's been caught up in this rally, right? And Netflix has had a good year. I'm not saying that they got caught up in the AI rally, and that's why it's up 70%. But the stock's up 70%. At some point, stocks don't just go up forever on good metrics. Those metrics were already sort of priced into the stock. You're seeing it teeter a little bit now before the call, and then you see what it does over the next 6 months, right? You're not necessarily always going to have these big beats, big jumps like we saw in the first quarter when it came to some of those companies when they talked about AI or when Netflix has had these bonuses from talking about the ad growth and things like that in the past. I think you're sort of seeing a little bit more muted because it's already priced into the stock to some extent.
Yes, and Josh, I think you wrote about this too, that the theme of this earnings season as well will be unless these companies significantly beat, you're not going to see much change in the stock price because we do have an overheated market right now.
And let's talk about another stock, Pras, that's been a little hot. We got Tesla up over 100% to start the year. Now on earnings, really not moving too much. I mean, what was the main takeaway?
So first of all, I want to say in relation to also Netflix too, is that we're talking about after hours trading here. So it's very light. It's very sort of volatile. Wait till tomorrow to see what's going to happen. But right now, Tesla shares basically flat, which is kind of a surprise from Tesla. But I want to note that strong earnings, revenue beat here, revenue up to almost $25 billion, right? That's up 46% from a year ago, so strong revenue there. But what's causing it? It's those price cuts, fueling those additional sales. Saw a margin miss here, 18.2% margins, missing estimates there. Operating margins came in at 9.6%, Allie. Compare that to Netflix, right?
Right.
And that's the first time it's dipped below 10 in a long time. almost 500 basis points lower than a year ago. So really seeing that margin issue here. Hopefully we hear for Tesla investors, hopefully you hear about, hey, this is the trough of our margin kind of season here. Hopefully they're going to pick up slightly. We'll see what they say, but they didn't indicate that this is the end of margin sort of
that
slippage.
To me is part of probably why you're seeing Tesla stock not move that much right now, right? Because they don't put out guidance for that margin in that release you were just going through. So you don't really have any insight into if it is trough. A lot of analysts have called for it to be the bottom of that margin decline that we've seen over the last couple of quarters. Until you actually know, until Elon comes on tonight and hopefully for Tesla investors says this is as low as the margin's going to get, we think we're going to get back up now.
Yeah.
Then you probably see the stock pop, or at least that's what people are looking for, right? Also, another interesting part of what you were reading that I thought is just stands out about Tesla and how it normally moves after earnings. So Tesla's beat on adjusted EPS 8 of the last 10 quarters. The stock's fallen 6 of those times, though. And that's normally a metric that sometimes you move up on, right? So it hasn't necessarily been a driver for Tesla to the upside, even when they do beat.
It's never been about the earnings, right? It's been about the other stuff, the margins, the Cybertruck.
Well,
What'd you say about the Cybertruck?
Netflix too. I mean, earnings steadily beat, but that's not enough. The stock's down 5%.
So, Cybertruck on track for production and also initial deliveries later this year is what they said. So we'll see if that means Q3 or Q4. Elon Musk said last quarter, Q3, end of Q3 was the delivery event slated to be scheduled. We'll see if that happens. So we'll hear about that in a little bit.
So what do you think the margin decline and the margin miss was on? Was it from those price hikes and the pricing war that we're seeing?
The price cuts, for sure.
Price cuts, yes.
Yeah, they haven't been able to sort of improve scale and potentially component pricing enough to overcompensate for those price cuts. Maybe we'll hear a bit more about in the call, like, hey, actually, you know what, we're seeing that improve. We're actually build more cars cheaper. Parts are cheaper. We're going to actually kind of start seeing the higher profit margins here despite low prices. So that's the kind of goal that I think people want to hear about.
Interesting that the price cuts could boost revenue, but then hurt margins in that way.